To watch the full lecture of all subjects, kindly subscribe to my YouTube channel and press the bell icon because whenever I post the new videos, you will get the immediate notifications. Hello everyone, welcome to my YouTube channel. In this particular part, let us discuss about the exemptions to the general rule. So what is the general rule in the income tax is that whatever the income the person has earned in the previous year, for that he will be paying the tax in the assessment year. Previous yearly earn ಮಾಡಿರ್ತಕ್ಕಂಥ ಇನ್ಕಮ್ಗೆ assessment yearly ಅದಕ್ಕೆ ಟ್ಯಾಕ್ಸ್ ಅನ್ನ ಕಟ್ಟುವಂತದ್ದು. It's a general rule. So there are certain exemptions for this general rule. In some cases, the person will be taxed in the year which he earns the income. So these are the exemptions. Means in some cases or in some situations, the person has to pay the tax in the year where he earns the income, not in the next year. But as soon as he earns the income, he has to pay the tax. Let us see what are those cases. The case number 1 is that income from any non-resident from shipping business. For example, a person is a non-resident of India, is not a resident of India. Okay, so what happens is he is having a shipping business. So he is having some shipping business. In that shipping business he is earning certain income, so in importing and exporting of goods and services example. So whatever the income he has earned, for that particular income he has to pay the tax in the year which he has earned the income. So that particular goods, even before it leaves India, he need to pay the tax for the same. Once the tax is paid, then only he can ship the goods from India. So this is the first exemption, income from any non-resident from shipping business. If he is having any shipping business and before the goods leaves India, he need to pay the tax for that goods immediately, and then only the goods can be shipped outside India. The second exemption is that the income from persons living India. For example, I was a citizen of India and I'm living India permanently. So a person is living India permanently and he doesn't want to come back to India. So whatever the income he had earned in the year when he was living, so for the same income he need to pay the tax in that particular year only before he leaves India. An individual leaves India without the intention of returning to India, means permanently. He don't have any intention in his mind that he'll come back to India, then he need to pay the tax before leaving India. He should pay all the tax on his income till the probable date of departure. For example, he's supposed to leave India. He's decided to leave on 25th Jan 2022, you think. So before this only he need to pay the all the tax he has liability. Whatever the tax liability he is having, all the tax he need to pay to the government, and then only he is supposed to leave India. This is case number 2. Next, income from association of persons. Okay, association of persons, a body of individuals or an artificial judicial persons formed for a particular event or purpose. Means particular event or purpose means they will be existing only for some time. For example, let me say 2 months, or for a special cause, means they would have done a charity event or special event. So till that particular event will get over, the existence of these will be there. Once their event is over, the existence of association of persons, a body of individuals, and artificial juridical persons, everything will be closed. So whatever the income they have earned from that, they need to pay immediately. So association of person or a body of individuals or an artificial juridical persons, it is formed for a particular event or a purpose, or it will not occur in future again. Once again the event will be not occurring in the future, So such kind of association will be taxed in the current year only. In the same year only it will be taxed. This is the third exemption. The fourth exemption is income of a person to likely transfer the assets to avoid tax. Now, this is very common. A person will just transfer his asset to another person to just escape from paying up the tax, isn't it? So, what happens? Before transferring, the income has to be the tax on income or tax on that particular asset have to be paid in the current assessment year only. Now, if a person is selling or he is transferring his particular assets to another person to avoid any tax liability, means before even the assets is transferred or before even the assets is even, you can consider it as sold, the person who was the owner of the asset will be taxed in the current assessment year only. He cannot say that I'll pay the tax in the next upcoming year. No, he has to pay all the tax in that particular assessment year itself before even transferring the asset. Next is income of a discontinued business or profession. Now I'm just closing or the discontinuance or the dissolution my business or any of my profession, means whatever the income I have earned, the same income will be taxed in the current assessment year only. Any business if I'm closing or any profession I'm ending it up, I have to pay the tax on whatever the income I have earned in that particular current assessment year only. So these are all about the exemptions to the general rule. Hope you have understood this video very well. If you have understood, please put in the comment box that you have understood. At the same time, if you have any doubts, please put all your doubts in the comment box. We'll respond to your doubts as soon as possible. Thank you for watching the video. I'll come back with the next video. If you have any queries regarding today's session, kindly send your queries to education.mbroadcast@gmail.com.